Most people have no idea what the number one wealth killer is, but it's actually sitting in their driveway costing them hundreds a month and sometimes even thousands a month. Today, we're going to talk about the biggest thing keeping people broke even if they're making a ton of money. Cars feel harmless. Everyone drives one. I love cars, but the industry itself is designed to drain your money. According to Edmunds, KBB, Experian, and other online resources, they say that cars lose 15 to 20% of value as soon as you drive it off the lot. 82% of people finance their cars. Average new car payment is over $730 per month, and the used cars are now over $530 a month. Add insurance, gas, and maintenance, you're easily at $1,000+ a month. That's a whole mortgage. I've got mortgages that are $700 to $800 something a month, and it's appreciating in value over time. Versus cars that just, majority of them depreciates in value. You're gonna have those high-end, boutique or luxury cars that may be able to retain value, or sometimes even you get more for it, but majority of them are going to depreciate, right? The real mistake isn't owning a car, it's really people buying way more car than they can actually afford, right? People want luxury, people want brand new, and people fall for the monthly payment versus the over total cost. And dealership knows exactly how to sell you on them, right? And I have definitely fell for this in the past as well. This single decision delays people building wealth for years. Before you think that I'm preaching on a pedestal, I made the same mistakes over and over again as well. My first car was a Ford Explorer from the 90s, and it was all blacked out, had really crazy rims on it. It had over 100,000 miles. Cosmetically, it looked a little cool and funky a little bit as well on the outside. The interior was okay, but it drove fine. And as soon as I started making more money, the first thing that I did was I went out and bought a Infiniti G35. I even needed to co-sign it for that. My brother was crazy enough to co-sign me on it. And honestly, I should not have sold that Ford. I should have drove that Ford to the ground. That thing was something that I should have kept for much longer, and I regret buying that Infiniti. But it's all learning lessons, right? Had I kept that first car and drove it to the ground, it probably would have been the smarter financial decision. But unfortunately, I didn't follow it. For that Infiniti, I took out a $22,000 loan. Interest rates were in the sixes. The payment was roughly around $335 to $350-ish, right? And the interest rate itself wasn't the greatest either. So those car payments felt like forever. I loved that car, but I got tired of it within months, especially the debt part. Reality hit fast. It's drained my cash flow and as well ability to seize other opportunities. Maintenance on the Infiniti wasn't cheap either. I was literally stressed about miles and scratches on the vehicle, making sure I didn't damage it or anything like that. And I love that car, but honestly, I probably shouldn't have bought it. It was really bad timing. But 6 years later, I sold it, and this was the part that really blew my mind. I bought it for, the loan itself was $22,000. I think altogether, I bought it for $25,000. And 6 years later, I went to go sell it. I could only get around $6,000 for it. That thing depreciated so fast. It was crazy. And that was such a huge eye-opener moment for me because ever since that time frame, I always try to get a much better deal on cars. Even after being free of payments, once I was done paying off that Infiniti, I couldn't wait to get another loan. I don't know what I was thinking, but we went ahead and we bought another car. And we did take out a smaller loan this time, and I went to go buy a SUV, Infiniti FX35. And I bought that vehicle for around $18,000, but I believe I took out for a small loan for about $10,000. The car was probably worth about 22 to 24 around that time. I did have a slight hedge on it, and when I went to go sell that car 4 or 5 years later, I think it was around for about 15 something thousand dollars that I was able to make from it. So that was huge. After that sale is, when I was down here in Virginia, I actually, I used the money that I got from that car sale and went ahead and bought a Toyota Prius for about $6,000. It had about 100,000 miles on it, 2008 Toyota Prius. I had that thing, and it was, I bought it for 100 plus thousand miles. I had it until the beginning of this year, and I sold that to a friend actually for 500 bucks. It probably could have been sold, for about $2,000-3,000. And I used some of the money from the sale to put it as a down payment towards a Nissan Sentra for my wife. We had that for about 2 years. That payment was only about 151 bucks, so nothing crazy. Insurance beginning to start going down as well as I grew older, right? Things like that kind of help offset it. And eventually, once that lease was over, we went and I saved up enough money to get a Jeep Grand Cherokee. It was a 2015 Jeep Grand Cherokee, so it was a nice vehicle, nice little upgrade for us, because all my cars have been, 2000s. I've also had other splurge purchases where, I bought a BMW M550i and as well Audi RS5, all cash. And this was when I was actually able to afford it, right? And even after that, with those cars, I got eventually tired of it after a while. The Audi, I had it for like a year. And that one was actually a great one because I was able to break even on it. So I had a lot of fun with the vehicle, rode it, probably 10, 12,000 miles on it. And I was able to go ahead and resell it for pretty much a break even, which was phenomenal because that's ideally what I was looking for, was a car that I could have some fun with and then go ahead and resell it and just break even at least, or only lose $5,000, $10,000, right? It's almost like renting the vehicle. And that's the way I start looking at it. I'm trying to look for other vehicles eventually too, to just have it for a little while and then go ahead and resell it and make a quick buck on it or just break even. Now the cars that we've got are the 2015 Jeep Grand Cherokee fully paid off, and I have a 2022 Subaru Outback, and that one I bought for about 19 and some change, right under $20,000 after all fees. So that one I bought cash as well, so no monthly payments on that. And the cars have made such a big difference because that one decision, that Infiniti G35, had I not bought that vehicle, it would have saved me so much time and money to get started on the investing earlier, and just allow me to build more wealth quicker, right? So trust me, I'm not judging anyone. I've lived this mistake as well. Here's a simple fix that could literally save you tens of thousands of dollars. Buy a car that's 2 to 4 years old. If it's older, but as long as it's reliable, that's fine as well. And you want to keep it under your 10% of your annual income. Examples: if you make under $60,000, keep the car budget under $6,000. If you make $80,000, keep it under $8,000. If you make $100,000, you keep it under $10,000, right? And that's the overall cost of the vehicle. If you pay it outright or even take out a payment on it, because it's a little more affordable. As long as it gets you to point A to point B, that's all that matters. Because most people would save about $400 to $700+ a month should they decide to do this with just one of their vehicle. And keep in mind, a lot of people have multiple vehicles and multiple loans that are killing their wealth. That extra money is what's going to help build wealth. We need disposable income. Once that's done, investing becomes automatic and emergency funds grow faster. You can buy assets instead of liabilities, and you can stop paying interest on something that's losing value. That one shift can fast forward your wealth 3 to 5 years. In 2025, here's the strategy that actually works. Buy 3 to 5 year old vehicles, Hondas, Toyotas, Hyundais, Kia, Mazdas. Pay cash if you can, but if not, keep financing to 36 months or less. And as I mentioned above, with 10% of your annual income. Avoid new luxury cars unless you're worth $500,000 or more. And never base it on emotions, because if you base it on emotion, that's when you're overlooking the financing aspect of it that ends up hurting you in the long run. Your car should be helping you get to where you want to go, not keeping you broke. If you enjoy this content and you want to see more of these videos, please hit that like button, and as well consider subscribing. This let YouTube know that I'm doing a good job at this. And as well, drop a comment down below. I'd be curious on your feedback, and drop a comment down below on what your car payment is now.